I'm Martin Smith and this is your UFXBank Week in Review. Today we'll cover some of the major financial events of the past week and discuss how they impact the global currency markets. But before we cover headlines of the week, let's look at last week's rises and fallers. The euro-US dollar pair fell this week over concern about the Greek debt. Most of the damage occurred on Wednesday when the pair fell 1.8%. But managed to minimize losses and closed on Friday down only 0.25%. The pair was last trading at 143.09. The pound struggled most of the week versus the dollar, falling to 161.91 for a total weekly loss of 0.2%. The dollar-yen struggled once again this week. This time the pair showed a loss of 0.35%. The pair closed at 80.02 on Friday. Once again, it was back and forth for the US dollar CAD, and the pair closed on Friday virtually unchanged and trading at 0.9792. Commodities now. August crude orders tumbled this down to $93 by Friday's close, down 6.3%. Gold made some gains during the week, pulling in 0.5% by Friday's close. The precious metal was last trading at $1,539 an ounce. Okay, the headlines now. The euro rose against the dollar by the most in 2 weeks after Germany indicated their willingness to work with the ECB on a debt plan for Greece. Though Germany had demanded that bondholders should shoulder a significant share of the Greek rescue, German Chancellor Angela Merkel backed away from those statements, and as a consequence, the euro gained in response. The euro has gained 2.5% for 2011 against 9 other developed nation currencies. The number was likely to be higher, but the currency had fallen earlier as investors feared that the potential Greek default might spread to other nations. Overall, there seems to be an easing of some of the concerns related to high-risk investments and high-yielding currencies such as the euro, but this may be due to greater concerns that the US economy may be faltering. Generally, in times of economic concern, the dollar strengthens. However, the Federal Reserve in the US appears to be pursuing a weaker dollar policy, which is having a negative effect on the price of the dollar, though US exports are increasing as a result. While QE2 being concluded at the end of the month, the dollar could stop weakening and may respond with significant gains if the sovereign debt crisis continues to surface in the headlines. The Fed is not expected to resume a similar program in the near future, which could prove beneficial to the dollar. Though some risk appetite has resumed in the market, some commodities linked to growth, such as crude oil, didn't reflect that optimism. Instead, oil prices fell to a 4-month low as oil traders feared reduced economic growth and fuel demand. Until there is a clear resolution in place to handle the debt crisis in Europe, investors will likely be pessimistic as demand remains uncertain. The 6.3% drop in oil prices marked the biggest weekly decline in over 6 weeks. Well, that's all we have time for today. I hope you enjoyed our Week in Review and you'll join us next week. Until then, be sure to visit us at UFXBank.com for simple, safe, secure trading. For UFX Bank, I'm Martin Smith. Good luck and happy trading.